right? So anyways, yeah, imagine crossing the desert and you get there and it's not a mirage. You're like, this is paradise. There's a palm tree. There's unlimited drinking water. You're like, wow. So anyways, welcome to QuantBox Live. It is early in the morning, hours and hours and hours before the open of trading. It's time to get your global macro on at QuantBox Live, where we uncover the best fundamental opportunities across global markets. My name is Wayne McDonald. This is the face of an economist. Yeah, cool, but I'm a trader and an investor first, and then I became an economist. What kind of knucklehead goes back to university full time in his mid 40s? This is what it looks like. And what did I study? Macroeconomics. Some of I had multiple professors that worked at the Boston Fed and worked at the New York Fed. Like, that's why you go to Harvard. Whoa. So anyways, I'm that in love with macroeconomic research, but not like I'm not a mathy person. It's not like I like calculus. What I like is money. I like trading. I like investing. And this type of research helps me make wise investment decisions based on reality, not what I want, not what I think. You know, like Bill Ackman, did you see him today? He's like, I'm betting everything that the Fed starts cutting interest rates in the first quarter next year. That's actually a giant bet. Like, that's a giant bet. I don't like that. Now, I like Bill Ackman. He's made some good investments, but if you go through his history, he's made some whopping terrible ones too. So I spent yesterday reading the Fed meeting minutes, and I could disagree with him because I read the report. So anyways, I don't want to get in a situation where I'm betting. I need informed decisions, and that's why QuantBox was created, because there's too much information. There's just too much information, and they're from too many different sources, right? The Fed, the OECD, the CFTC, so on and so forth, right? Every central bank in the world, and you got to track all this stuff, and the difference between GDP in multiple countries, and the difference between inflation and employment and interest rates and institutional positioning and all this kind of stuff. It's just too much. So I needed a way to automate it. It's just and I need to clearly understand what it's saying. This is projecting interest rates into the future. Well, how does it do this? It actually pulls it out of the central bank's database. It's what the central banks are telling us. Not a guess, Bill Ackman. This what the central bank actually told us. So now you just have to track the central bank in Australia, Canada, Switzerland, Europe, the UK, Japan, New Zealand, and the United States. That's all. That's all. Just go ahead and track all that. Put that in a little spreadsheet or automate it. Also, what about market sentiment? This is not economic data anymore. This is not macroeconomics anymore, because we're traders and investors. So this is market sentiment, not based on opinions. Hey, how do you feel about gold this morning? I don't know. No. This is actually tracking what's the money flow of capital right now, today, like in this instant, over the course of the trading week and over the course of the last 30 days, putting it all together into a basket, analyzing each one like VIX, yields, dollar, yen, gold, and S&P 500, tracking all of that as a basket and scoring it. Is money flowing towards risk on, or is money flowing to risk off? And then organizing the assets accordingly. Oh my God. This is really, really powerful stuff. So YouTubers, what we're trying to tell you is you're missing out. Hey, Wayne, what do you think about Bitcoin? Well, click on that. So anyways, let's get going, everybody. And by the way, YouTube, you're watching it delayed, but half the time I seem to forget to even upload the video for you. Why don't you just subscribe? Okay. Is confidence in your trading and investing ability and your decision-making process, is that worth $80 a month? Confidence? I don't know. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let me get into, oh, by the way, if you get here and it's like, I subscribe to QuantBox, but it's broken. I get this email almost every day. So I threw in a huge video. People miss it though, of course. So go here first if you have that and you're like, it's broken. The data not loading? QuantBox, it's not a QuantBox error. Test this first. And if that works, yeah. If that doesn't work, then there might actually be a problem. But watch the video. There's multiple reasons why that's going on. What we're doing is we need to log into the Google Cloud, and you subscribed with a Gmail. And you also, your browser has multiple profiles. Make sure you're logging into all the appropriate accounts. Some people don't even realize they've accidentally set up 5 different browser profiles. Well, this data now goes into the Google Cloud, and you basically have to have the key. And we've put your Gmail address as the key. Okay. What's up, PJ? Yeah, watch the video, PJ. I didn't even know you were there, but all of a sudden you're like, he's talking to me. I wasn't talking to you. But anyways, try this too. If that works, then you're set up properly. Your browser is blocking you, or you're not using the right Gmail, or you got ad blockers, but there's something not communicated. But the bottom line is, if you're set up properly, Pro will work. Yeah. Okay. Yeah. All right. All right. Let's take a look at the world today. Yields are even lower. Yay! That means there's a bond market and treasury market rally. I'm happy with that. Thank you. I think that trade is paid 3%, if I'm right, so far. I've collected 3%, which is good. That's not bad for a month. I mean, that's a good month. Thank you, yields. Oil, you see that? Yeah. I think Johnny Rockets on that one, which is really cool. It came up, it came down to 75, then it went up and then came down and did a roll reversal, and now it's up again. Cool beans, man. Cool beans. Lovely trade. Good job, Johnny. Okay. Gold is up a bit. Yep, as it should. Okay. As it should. Remember, we were lower and then up. Interesting. It's becoming part of the aggregate demand picture, but we might be shifting over the next few months in sentiment, and it'll be interesting to see how gold reacts. Is it risk off as an asset, or is it risk on? I think now it's somewhere in between. Okay. Okay. So, anyways, because we don't really have inflation. Remember what we're talking about tomorrow, or sorry, not tomorrow. Yesterday, we were talking about the Fed funds rate is at 5.5, right? 5.25 to 5.5. And yet inflation is somewhere around 3.5, right? 3.8, working its way down. We'll find out more tomorrow when core PCE comes out. But nonetheless, interest rates are higher than inflation. And inflation is coming down. So this is what's making Bill Ackman, and of course, I talked about it yesterday. Now, obviously, Bill Ackman might be a subscriber and he'll listen to my speech. And now he's going to bet his billions of dollars on it. But what he's saying is this isn't sustainable. And if this keeps falling, the spread keeps widening, and that becomes more and more bearish. And the Fed will have to cut sooner than they planned. Now, the market says the Fed's planning to cut in the second half. The Fed is telling us they're not going to cut at all next year. And Bill Ackman is they're going to cut early. So that would entail, let's say, Bill Ackman would say in the first quarter, core PCE core PCE drops to 2.9%. and the spread widens just dramatically, and the Fed will be forced to cut. Well, I've analyzed the data myself, and I don't think that's true. But, he's the billionaire, right? His Rolls Royce is nicer than my Rolls Royce. Whatever. But that's what he's playing out. What I think is likely to happen is inflation doesn't drop. Anyways, S&P 455555555. Nice. No, it's not going up, but it ain't going down. Okay, so far so good. Tomorrow is the big event. We talked about that even on Sunday night in my investor bootcamp day trading group. We meet Sundays, and I suggested, well, the big event is PCE on Thursday. So here we are. What's happened all week? Nothing. How would you describe this week? Wait, did it start? like, like quiet, right? Yeah, and low volume. I was listening to probably Bloomberg. Was it Bloomberg or CNBC? One of them was talking about trading yesterday, and they're like, nothing really happened. But the interesting part of nothing happening is nothing happened with half the volume. And so what does it mean? Everyone's standing around. Should I take profit? Should I take profit? Should I take profit? The scary part of that is if we have a big down day, maybe everyone wants to get out, and sort of a negative 2% day drops into a negative 4% day pretty quickly. And then what? Then everyone after that, right? And just suddenly it's all over. It's not over, and then it's over. We peaked for the year kind of thing. So we got to be careful for that, but that hasn't happened. So we keep playing the reality. QuantBox is telling us the reality. Right now, there is no reality. It ain't up, it ain't down. Okay, euro dollar stuck at 110. Look, if you were a bear, you'd probably think about selling. Psychological level. So now you want to use technical analysis. Bitcoin way up, way up. Okay, risk on, Bubba. Risk on. 38K on the biddy. I want to remind everybody there was a free upgrade last week, or was it 2 weeks ago? 2 weeks ago, under bonds and commodities. Okay, we have a Bitcoin, and that's interesting. Now, even this one's not. So some of these, maybe all of them, there might be one error somewhere, but there's a detachment from this to that. It's supposed to turn green and say bullish. It should be moderately bullish. Huh. But anyways, we do have some analysis there, and I'm playing around with new ways to display our thoughts. Let's go with our risk gauge. Okay. Neutral. 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 Knowing when to hold them, knowing when to fold them. Let's not fold, but you hold your cards tight. Imagine you've been long for a month. S&P 500 is way up. NASDAQ is way, way up. What if this all just turned red, 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 red? Fold them, right? Maybe you're even done for the year. Okay. Anyways, who knows? So be careful. What's the trend? Okay. Niet. Careful. The only thing that's moving is the Bitcoin, huh? It's the only thing moving. So be careful. Everything is showing us when you look at a scatter plot like this, what it's saying is be cautious. Don't trade. If you do trade, trade your trend. If you do trade and you trade your trend, trade light, trade a smaller lot size. Okay. Might be a good day to paint your office. Okay. Because here's the thing, if you go in with the attitude of a trader, you'll find something to do. When you're, when you're shot, when you shop while you're hungry, you'll buy almost anything. Well, is that really, are you looking for fun or are you looking for profit? Okay. So this is why you start with your analysis first, and everything says caution, caution, caution. So be cautious. Okay. Nothing is working. Okay. We know, excuse me, we know what should be working. Let's say, like, when we go to this chart, we know what should be happening, but right now, so this is longer term. What should happen in December? But when we look at now, what's happening in the last couple of hours? The last few hours say, don't do anything. Risk gauges, what does it say for today? Like overnight, like Asian European session? What's the result of that? Right? Stand pat, stand down, soldier. What about weekly? It says if you go out and find things to do, you're making it up. You're in a virtual reality. Okay. You're dreaming. And look at this, even on monthly now, okay, it's mixed. Now it's an interesting mix. VIX down 68%, right? That's good. Okay. That's risk on. Yen is up though. That's bad. You see, now we're in this world where we got a divergence of things going on. Yields are way down. That's good. S&P 500 is up. That's really good. Dollar's weak. That's really good. Gold is up 3.5%. Ooh. That's what I was talking about earlier. Well, often gold is up because we have lots of inflation. Do we have lots of inflation? No. 2% below interest rates. 2% lower than the Fed funds rate. No, we don't have high inflation. We have high interest rates. But anyway, so like, why are you buying gold? Okay. You want a gold tooth. You've always wanted gold front teeth. Yeah, it's going to cost you. Hey, don't laugh when you look at and I did this many years ago. I looked at the amount of gold for each country that imports gold, right? And then I noticed Japan imported a lot of gold for the size of its economy, relative to, you know, and then I thought maybe that it had to do with manufacturing. And of course, there was a lot of manufacturing going on and they needed it, to make computers and stuff. But it was actually one interesting thing that stood out. Japan imports a lot of gold for dentistry compared to the rest of the world. And I'm like, oh, that's interesting. Right. And apparently it goes back a long time. I don't want to say any more about that, but watch Band of Brothers and it's horrifying. But anyways, so look, I'm going to leave it at that. Everything says be cautious. So I'm not even going to look at a chart today. This is the news to use. This is reality, what we're looking at today and in general. So here's the thing. This doesn't predict the future, just telling you what's happening now and what should be happening based on macroeconomics and all this kind of stuff. You still need to think forward. I don't want to think forward for you, but I'll tell you what you should be doing. Okay. I don't want to just go through a chart and find it. Tomorrow is PCE. So you should look at the trend in PCE and look at the trend in CPI. Remember, there is a difference. The Fed prefers PCE. In fact, they prefer core PCE. Okay. And you want to look at that and try to analyze it and say, what do you think is going to happen? Now, QuantBox tells you what they think inflation is going to be. This is where most people miss. I guess I'll show you this. Go to the central banks, because you're going to get, like, when you go to the calendar and they're like, this is what we expect PCE. I don't know who comes up with those numbers, and sometimes they're very wrong. When you go here, okay, before I analyze this, let's just go back to the basics. PCE comes out tomorrow. Is it good? Is it bad? Well, it depends on what it's relative to what the Fed has told us. Okay. So use use the Fed analysis as the benchmark. So to get that, you go to the central bank forecast tool and you click on the dollar. Now it loads only the United States. Okay. The inflation forecast here is what the Fed told us it would be. And this gets updated every SEP, Summary of Economic Projections. So the next one's coming in December, but nonetheless. So it's the fourth quarter, right? So it should be, oh, wait, Q3, Q4. So the Fed already told us this is what they think PCE will be. If it's lower than that, that's good. The Fed's done. Okay. And the Fed might cut. If it's higher than that, the Fed's not done, or at least they don't cut, and Bill Ackman changes his press release. And when he said he was certain they were going to cut in the first quarter, he's like, I never said that. So anyways, this is the number to use. This is how this tool works. Okay. So now you have a benchmark. Like, forget what the market says. I don't know these, when it says, oh, well, the market thinks 3.5. No. You got something better than that. You think 3.37. Now, what is that? Why 0.3? How do you get to 3.37? It's the mean of the distribution of opinions of where inflation will be in the fourth quarter. This is the opinions of every FOMC member, every single one of them. This is right. So now we have a better range, and now you do know where it comes from. The people that make the decision of whether they raise interest rates or not. So when so you might want to, you have this research, and then you can figure out how does that impact interest rates. Okay. Okay. That's a dramatic change, actually. I was surprised it popped up that way. Wow. I'll have to ask the developers, where's that coming from? Is that the SEP? I have to double check. That's dramatic. I thought it would be a lot flatter than that. But maybe I'm wrong. Maybe that was the update of the last SEP. But anyways, um look at this. Think about what you think will happen. Maybe look at the trend of inflation. Look at maybe what CPI was like. Look at maybe what oil did last month and what oil is doing now, because what's happening now will get reported in the future, right? And you put all these things together, and you might be able to get tomorrow's trade today. But I don't want to go find you a trade based on what might happen tomorrow. I want you to think about it, right? Okay. Yeah, Jessica, you're right. And I say it in that little help video. If it ain't working none, you're struggling to log into the Google Cloud, try Google Chrome with your Gmail. Just line it all up. Yeah. Oh, for shizzle. Right. So, anyways, guys, think about tomorrow today. Maybe you get an opportunity to get the trade you think will likely happen based on what you think the outcome is. But tomorrow's the big day. And maybe nothing appears. And right now it says everything up to now has been zip, zilch, nada. And maybe today it continues to be a zip, zilch, nada. But tomorrow's trade might appear today. It just isn't there now. When we look at the risk gauges and when we look at the scatter plots, remember both of those are market sentiment indicators based on the flow of capital and not opinions. And what do they say? Walk away. Well, it's not quite true. What it says is set up tomorrow. Set up tomorrow. Today doesn't exist. If today moves and you make money, it's based on what people are thinking about tomorrow. So think about tomorrow today. That's the role of QuantBox. So now you know. Yo, slick blow. It's driving me out of my mind. All right, too early. Peace on earth. May the pips be with you. May your profits be above average. I got to jump.